Bloomberg Audio Studios. Podcasts, radio, news.
This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. The Bloomberg Businessweek Daily podcast with Carol Massar and Tim Stenovec on Bloomberg Radio.
In 13 days, earnings season in the U.S. gets underway. J.P. Morgan Chase kicking it off before the market open, along with a few other big banks. That will happen on July 15th. It is also, what's so great about this, Matt, I love earnings season. I feel like it's a gut check on companies. And I know sometimes we feel like companies manage expectations in a big way. But we also do hear from the C-suites on those analyst and investor calls.
Yeah, absolutely. I mean, that's the most important part, right? It doesn't really matter once you get there how they did in the quarter they're reporting on. It really matters what the outlook is. Exactly.
All right. And we're going to talk a little bit about outlook because our Michael McKee actually bringing this to our attention this morning, a survey out from the Atlanta Fed on the evolving impact of tariffs on CFOs' outlooks. It was, as we said, I think published this morning. Mike is, of course, Bloomberg News international economics and policy correspondent. He's right here in our studio. And joining us from Atlanta is Brent Meyer. He's assistant vice president and economist at the Economic Survey Research Center at the Fed Bank of Atlanta. Great to have you here with us both. Brent, Mike did share your survey with us this morning. Lay it out for us and what you guys found out.
Good afternoon. Thanks for having me. So basically, what we found is over the past few quarters, CFOs are seeing a darkening outlook. And it seems to be connected to firms that are the most heavily exposed to tariffs. They have a much heavier exposure on inputs and supplies coming from abroad, and their outlooks deteriorated markedly. So their expectations for GDP growth, say in 2025, they're down about a percentage point from where they were at the end of last year. Their sales revenue growth projections are down. And then on the flip side, unit cost expectations and price expectations are up quite a bit. So again, we see these things as sort of CFOs see things darkening materially as we move throughout the remainder of the year.
On the other hand, they're coming from a pretty good level, right? We were talking with Nir Kaysar earlier, who wrote a piece for Bloomberg Opinion and pointed out that profit margins for the S&P 500 equal weight index are at a record high. So they do have some cushion into which to absorb tariffs if they have to.
Yeah, but potentially. And that's an interesting angle. So one thing we can look at is both firms' cost and price projections for the year, their expectations for the year. And one thing that we see here is that the sort of margin squeeze seems to be strongest on those that are more heavily exposed to the potential tariffs and the tariff picture. The other thing that's kind of interesting here is that firms that aren't directly exposed to tariffs seem to be pushing up their price expectations a little bit more than where their costs are coming from. So we might see margin compression on those that are most heavily exposed, and at the same time on those that maybe aren't as heavily exposed to the sort of tariff picture, seeing a little bit of increased margin or something,
That's amazing.
It's pretty.
I mean, that is absolutely fascinating. Mike, what do you make? Mike, I'm going to bring in Mike McKee here. What do you make of that? So firms that don't really need to pay for it are trying to take price for it.
Well, it doesn't surprise anybody, I don't think, and it will add to inflation questions, shall we say. Not necessarily to inflation. We'll have to see how widespread that is. I'm curious, though, when you did your survey, the time frame on it. In other words, did anybody say we might feel a whole lot better come July 8th when we find out what the reciprocal tariffs are?
So, no, we didn't ask that question. It would have been a great question to ask. Next time we go in the field, we'll definitely be able to pick that up. But the survey was in the field during the first couple of weeks of June. And we're comparing really what we wrote in this article compares to the end of last year. So we can see as they move forward from, say, right around the time of the election through the first quarter survey and the second quarter survey, this sort of march or deterioration on sales revenue growth, and then the ratcheting up on the price picture.
You know, Brett, we love the stuff that we get from the various regional feds. I think about the GDP Now index that we get from you guys. And I'm sure stuff like this, how it works into some of your thoughts about kind of where we're going. But as you are gathering information anecdotally, real data points, public, private sector, I mean, what's the picture that you are seeing in the U.S. economy right now?
Oh, that's a good question. So if I take a wholesome approach and look across all our surveys, and here at the Atlanta Fed, we also have a regional economic information network. So this is a group of folks that are chatting face to face with businesses on a daily basis. It's a picture of very heightened uncertainty. A picture with, basically there are a lot of clouds on the horizon. We don't know exactly how things are going to play out. But at the same time, firms seem to be moving forward in a direction and expecting one to ratchet up price as as tariffs really hit their bottom line, and then at the same time anticipating, as they're raising price, seeing some of that bite into their sales revenue.
Did they suggest any actions they're going to take, or is this a case of what we've been hearing in terms of the Beige Book and other Fed communications, that companies are just sort of sitting and waiting to make decisions?
No, that's a good question, Mike. So there tends to be some dispersion here across maybe firm size. So larger firms that are a bit more agile, that are able to make different moves. It seems like they're doing so. Smaller firms, I think the picture is a bit cloudier there, but I think the bite from all of this action to date is likely to hit them a little bit harder. They're a little bit less well connected when we're talking about reconfiguring supply chains and things like that.
I wonder how this affects the labor market, because it seems that the larger firms, from what I'm hearing you say, are going to be able to deal with this better. And that is, I think, what has been our assumption. The smaller firms are going to have a much bigger problem, especially if they're exposed to international supply chains. But those smaller firms, don't they make up a massive share of U.S. jobs and job creation?
Yeah, I don't know what it is off the top of my head, but I think it's a very sizable share of overall employment on firms that are less than 250 employees in size. And yeah, that's right. So I think if you're looking in the rearview mirror, the employment picture looks reasonably positive. I mean, we've seen some slowing, but not a whole lot of quick deterioration. As we look forward, it's those small firms, we're paying a lot of attention to how their employment realizations and expectations evolve over the next couple of quarters.
Mike, last question to you. I mean, it's a big day tomorrow, right, with that monthly labor report. I mean, any number that comes in weaker is certainly going to catch our attention. But what are you anticipating here?
Well, I think we'll see a weak number for a couple of reasons. One, that's been the trend. Yeah. And two, the seasonal factors suggest that could be the case. But weak being a matter of definition. I mean, if you had 110,000, which is the forecast, that would kind of fit in with what the Fed thinks the regular replacement number needs to be to keep the unemployment rate steady. If we get anything significantly lower than that, it will put the idea of a July rate cut onto the market's agenda. Yeah. But I don't think it'll do so to the Fed. We'd need a rise in the unemployment rate for that.
All right, going to leave it there. Gentlemen, thank you so much. Really appreciate it. Of course, Brent Meyer, Assistant Vice President, Economist at the Economic Survey Research Center at the Fed Bank of Atlanta, out there in Atlanta. And Mike, thanks for bringing this to us. Really appreciate it. You're going to have a busy day tomorrow, right? You're here.
Yeah, I'm here. I'm here.
You're listening to the Bloomberg Businessweek Daily Podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Hey, the Republican-led House and Senate are planning to cut the Supplemental Nutrition Assistance Program known as SNAP, which could leave millions of Americans without enough food despite its importance as a safety net. We should point out that there have been some carve-outs in the Senate bill, so maybe not all states are impacted the same way. But we wanted to get into this story. It's on the Bloomberg terminal. It's also can be found at Bloomberg.com/Businessweek. With the details, let's bring in Bloomberg Businessweek writer Dina Shanker. She joins us in our Bloomberg Interactive Broker studio. Dina, I think everybody knows what SNAP is, but let's just kind of lay out some of the basics. What is it? Who qualifies for it? How many Americans use it? Give us a little bit of background here.
Sure. Thanks so much for having me. So SNAP is a food assistance program. It's a safety net program. It is available to people based on their income level, either at or 100% below the poverty line. That's sort of the baseline. States can sort of make adjustments to that based on their cost of living. In 2024, there were more than 40 million Americans using SNAP, which is about 12% of the population.
That is disturbingly high.
Why
are
so
that many
people?
Americans?
Yeah.
So it's crazy. What actually happened was that the numbers ballooned during COVID and never came really very far down because people, we talk about in a K-shaped economy, and this is a perfect example of some people have completely rebounded since COVID. And as these SNAP numbers show, a lot of people have not.
So is there any way of assessing, and I was asking Mike Dorning this earlier, and I'm afraid the answer is going to be no, but is there any way of assessing whether people are abusing these programs or whether those 40 million Americans actually cannot afford to feed themselves and their families?
So the way the bill is structured is based on state error rates. Now, an error can be an overpayment or an underpayment. And so the higher your error rate, as a state, then the higher percentage of the costs you're going to have to shoulder under the new bill. So the error rates really vary. Actually, the highest error rate belongs to, for 2023, belonged to Alaska, which had like a 60% error rate. But I think it's really important to remember that, as one of the people I spoke with pointed out to me, she said, listen, errors get made. To be clear, these are errors being made by the state administrative staff. These are not being made by the recipients. And also,
so the people who administer the program.
It's the states making the errors.
Okay.
Yeah. And as she pointed out, she said, we all make errors in our bills. I mean, I can say for myself, I've overpaid bills and then been like, oh, shoot, I have no money left in my checking account. I've underpaid and then had to pay late fees. And it's all just really by accident. So I think the idea of fraud, waste, and abuse, I'm sure somewhere somebody's doing something wrong, but it is not. From anyone I spoke to, it does not seem to be, like a really big issue. And one thing I will also add is that food banks, which are not part of the SNAP program, but often support some of the same communities, they're seeing increased demand too. So the increased demand is very real.
Yeah, I can imagine waste, fraud, and abuse in Medicare and Medicaid, right? Because people who run healthcare facilities are likely trying to take advantage of the system. It's harder to understand that somebody would try and claim food stamps if he or she didn't have to. It doesn't sound like it's that lucrative, for one thing. And it's also not, it wouldn't be a point of pride if you were using, food stamps in a grocery store. So the problem, of course, isn't really the fact that we are paying for 40 million Americans to use food stamps. The problem is 40 million Americans find themselves in that position. And I'm wondering if anyone's doing anything to address the cause of that.
Well, not in this bill, that much I can say. There are all sorts of organizations out there, I think, that are really trying to help people meet their basic needs, and as well as organizations trying to help people that are out of work find work. But remember that it's a huge issue. So I didn't mean to put you on the spot there, because it starts with childhood nutrition, education, love. There are a lot of issues, right, that lead to unemployment and poverty. And there's also a lot of people, are in jobs that they have jobs like a teacher who needs to take unpaid, this was an example that was relayed to me, who needs to take unpaid leave because she had a complicated pregnancy and birth.
Right.
And now she needs to go on food assistance because that's the only way to put.
And the husband has probably left.
That part of the story I have to say I didn't get.
But we've talked a lot about people like who just, have a bad turn in their life. They lose a job, they've got debt or something, and all of a sudden they find themselves in a really, really bad way. And it is. But Matt, I agree with you. It's kind of staggering. We're supposed to be the
wealthiest nation in the world, right?
And then we're dealing with these kind of statistics. So basically, though, Dina, like what happens to these people if they're not going to be able to get this assistance? I agree with what you were talking about, Matt. Like, we have to figure out what's the root cause of this.
But for now, they need food.
For now, they need food. And how many are kids?
So one estimate said that about 2 million households, SNAP using households, have children that will at least lose some benefits.
Yeah.
The bills cut the benefits in a variety. I have to say, like almost every conversation I had, I found out another way that they were cutting benefits. They are expanding work requirements. They are basically completely defunding. They are completely defunding a nutritional education program that really helped low-income families. And the biggest change is that they are shifting a portion of the costs to the states. So what used to be a completely federally funded benefits are now being switched to the states. But the states, unlike the federal government, they have to have a balanced budget. So how states are going to come up with tens of millions, hundreds of millions, sometimes more than $1 billion, depending on the state and how many recipients they have, is really, nobody knows. Like, that's the answer, is that nobody knows.
Right.
By the way, how much money are we talking about being saved in spending? Because it goes up against $4.5 trillion in tax cuts.
So the cost shifting, which is going to be the biggest portion, will save about $40 billion. So a small amount of those.
Peanuts relative to.
Exactly.
Yeah.
And I should say that the average SNAP benefit is about $6 a day per person. So we're here in New York City. How far would $6 get you in food today?
Especially if you live in a food desert. I mean, you basically would have like one fast food meal.
Yeah, I mean, but you can't spend it on hot prepared foods.
Right. Okay.
But yeah.
But you're going to go to a store that takes food stamps and they won't have any fresh produce, and your only choice is like hot Takis, right? So
I mean, you're not going to have a lot of options, and your family. I mean, if it's these cuts, the people that I'm speaking to, and when they watched this pass in the Senate, they're just devastated. I think there's a big question of like what are we going to do? For every meal a food bank provides, 9 come from SNAP. So what happens when that number is drastically cut? And people really don't know. And I'll just throw one more number in.
And God forbid the economy slows, right? Or we go into a recession.
I mean,
but anyway, go ahead.
And food prices are expected to go up as well. So one more number I'll throw in is that in this country, about 40% of our food goes to waste. And so it is just, the whole picture is just mind-boggling that we could have all these people who don't have enough food. We could have all these people throwing away food. I mean, it's crazy.
It makes no sense.
It makes no
sense. To have that much waste and then to see, so many people going without food.
And
it's pretty sad.
It's awful.
Dina Shanker, it's a great read. Check it out at Bloomberg.com and on the Bloomberg Businessweek writer, I should say, Dina Shanker.
You're listening to the Bloomberg Businessweek Daily Podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
If you're driving, pull over because you're going to want to listen to this story. Beneath layers of waste, landfills around the United States have been reaching scorching temperatures and neighbors have been getting sick. This is today's Bloomberg Big Take, where Bloomberg's Laura Bliss and Rachel Dottle write, for many of the more than 2 million Americans who live within a mile of a landfill, what all of this means is that they're living within a mile of a potential time bomb with little way to know when it might go off. You can read this full story and more from the Bloomberg Big Take. It's on the Bloomberg terminal and also at Bloomberg.com. bloomberg.com/bigtake. Let's head to our San Francisco bureau and to Bloomberg Businessweek editor and writer Laura Bliss. Laura, sobering story. What is America's hot garbage problem?
Yeah, thank you so much for having me. The landfill that you mentioned in LA County is a great example, and pockets of buried waste in this landfill have been rising to temperatures over 200 degrees for the past 3 years. That's about 40% higher than the EPA safety standard. California regulators suspect that what's causing this is too much oxygen getting into this landfill, which is a problem known to start fires. This goes against federal regulations. The landfill operator says that's not the case, says nothing is on fire. And as I found out, these landfills that have been overheating are a phenomenon that we've seen across the U.S. over the last 20 years. And there's real debate, there's real controversy, within the industry and between regulators about what's causing them and what to do about it.
Laura, first of all, I read your story this morning. The first thing I read on the Bloomberg, and I could not put it down. And, I'm the type of reader who typically goes through the first 4 paragraphs. I'm from the Matt Winkler School of Bloomberg, and then I'm done. So fantastic job writing this. One question I did have is, isn't it pretty easy to determine whether something is on fire or not? I mean, it seems like you could gauge that pretty quickly.
You would think so. You would think so. And a challenge with these incidents is that, the temperature climbs, this is happening several feet below the surface of the landfill. And so you don't necessarily see smoke. You don't necessarily smell, what you might think of as a burning smell. These events can manifest in a lot of different ways. And it's because actually that you don't necessarily see those, classic fire symptoms that the industry is saying, well, this is not a fire. We think it's something else that's going on here. But as the story shows, and thank you so much for reading it, I mean, regardless of what we call it, residents are getting sick, and there's a lot of challenges in really addressing the problem and kind of getting to the root cause.
What's crazy is like people are getting caught up. Is it a fire? Is it not a fire? And there's all these terminology, subsurface oxidation, smoldering events. But it's an important distinction because you write the distinction isn't trivial. Federal regulations explicitly forbid operators from running landfills in a way that starts fires. Why is that so important, especially when you so clearly write that people who are living nearby, they and their families are getting pretty sick?
Absolutely. I mean, it's been, a well-known issue in the industry for years, that these fires can create really dangerous and toxic situations. And, among the, few regulations that are out there at the federal level for landfills, don't start a fire is absolutely one of them. And, one of the concerning things that I found is that one of the key rules that environmental engineers and safety advocates say, was really there to prevent fires was actually rolled back. And so, as far as like what is there to do about it, that is something that a number of scientists highlighted for me, that we need the return of some of these rules, for example, to stop too much oxygen from getting in, because as we all know, right, that can start fires when you mix that with hot enough temperatures.
And the point is, it starts fires, but it also gives off really dangerous gases, right? And talk to us about what's happening to people who live nearby.
Yeah, I mean, so just to take the Chiquita Canyon landfill as an example, I mean, we see elevated levels of benzene, a known carcinogen, carbon monoxide, other toxic gases that are known, to cause the kind of respiratory, neurological, cardiovascular symptoms that people are reporting. Hand tremors, headaches, nosebleeds that won't end. People are having, cancer also, and wondering, is what's going on with the landfill having to do with my diagnosis?
So what can these people do about it? I mean, as I was reading your story, I had a feeling of like frustration in my chest because it's so hard to prove causation, right? People are getting sick who don't live near the landfill also. And these corporations have seemingly endless pools of money for litigation. I think of Dark Waters. I think of Aaron Brockovich. What can the houses, who is a the couple that you write about in your lead. What can they do about it?
Yeah, I mean, it's a great question. There are, I think, over a dozen, mass torts moving through the legal system right now of residents trying to take legal action to represent themselves. Los Angeles County is also sued. This at the state regulatory level, there have been a lot of enforcement actions. And I think what a lot of these efforts are all kind of pushing for are funds, from the operator to fund the relocation of residents, right, to get out of this danger zone. And so I think that is what a lot of people are pushing for at this point. But there's also, I write about in the story, Pilar Schiavo, who's an assembly member in California, has a bill that's she's I think is awaiting a hearing in the state Senate that would basically just attach more penalties, right, to landfills in the future that exhibit these symptoms that cause these kinds of problems for people.
What do the companies say?
Well, just to reiterate, right, they say that this is not a fire. This is what they call an elevated temperature landfill, which is a term that, the industry has applied to at least 10, large landfills across the U.S. over the last 20 years that have exhibited similar symptoms. And, they pointed to, millions of dollars that they've spent in mitigating the problem, adding gas wells to trap the odors, putting a cover on top, contributing some money to residents to, buy air filters and things like that.
Why don't they just go in there with cranes and dump trucks and move it away? I mean, there is a temperature regulation, right? They're not allowed to be above a certain temperature, and you can just stick a thermometer in there and see that this does exceed that regulation.
It's true. It's absolutely true. I think the challenge is, what do you do when these kind of hot temperatures become this kind of runaway problem? And again, the question of causation, what to call it, this all matters, right? Because that drives at the question of what do you do about it? And California regulators say you need to dig a fire break, which is actually not unlike what you're saying, right? You need to sort of create an almost a trench, right, to stop this reaction from progressing. The operator says that would make things much worse. They say that the solution is to keep pulling heat out using these wells. So there's a lot of disagreement there.
Well, and I feel like it gets into a bigger problem in the United States, Laura, and that has to do with waste, right? Like, what do we do with it? If you can't, I think there's pushback against creating new waste facilities, right? Or waste or dumps, basically.
I wouldn't want it in my backyard.
Exactly. So then what you have to do is deal with the existing ones and just pile more and more stuff into it. I mean, as you note in your story, is that for a long time people burn garbage. We thought that was the way to do it. And then we realized, okay, that's not the way. I mean, in doing kind of also some, giving us a little bit of a history lesson in terms of dealing with garbage. I mean, this is again becoming another big problem, not only maybe potentially for the health of U.S. citizens, but also for the climate.
Yeah, I mean, absolutely. I think this whole situation is a great and really alarming, picture of the problems that can arise, like when we just keep kind of piling our trash higher and deeper, right? And I mean, I will also add that, safety advocates will say, we're going to generate trash, right? We know that that trash is going to generate methane emissions. And that's kind of part of the story too, because trapping these emissions, you use these wells that can actually lead to more oxygen intrusion, which is known to start these fires. And so, advocates will say, we just need better monitoring, right? We need, better technology to monitor emission levels, real-time temperature monitoring, for example, so that, operators and regulators can take action more quickly instead of, letting problems kind of spiral.
Well, and as Carol and I were talking about this yesterday, one of the great things to do would be to stop generating as much waste. Right. I was over the weekend camping, looking for a spoon, and I went to a store and they had a box of 200 plastic ones if I wanted it. But that's part of the problem.
Yeah. Like making things that you actually reuse.
You got to attack the problem at the root. Yeah. Right. Laura, I'm sure you've thought about this a lot.
Absolutely. I mean, it's funny. Part of the way I celebrated publishing this story yesterday was taking the base of my dead electric toothbrush to a battery recycling facility, which even in the city of San Francisco was not that easy to find. But that's another issue of this too, right? We're not just generating more waste; we also have a lot more flammable waste. Vapes, e-cigarettes, like these kinds of things. And so, figuring out the right, safest place to put it is important too.
Yeah, and you bring on the recycling experts too. They'll say, you think so much stuff is being recycled, but it's not necessarily the case.
Doesn't everybody now have a drawer full of dead vape batteries?
Not in my house.
No,
right.
Not in my house. Laura, incredible story. Matt's right. We were talking about kind of the waste yesterday, and when he saw it this morning, he's like, "Oh my God! Like this is what we've been talking about." It's a great deep dive, and we so appreciate you giving us some time with it. Laura Bliss, Bloomberg Businessweek editor and writer. Check it out. You can find it on the Bloomberg and at Bloomberg.com/businessweek.
You're listening to the Bloomberg Businessweek Daily Podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
At the world's biggest asset manager, I don't know if you saw this, a Bitcoin exchange traded fund, Matt, now generates more revenue than its signature tracker of the S&P 500. So we're talking about the iShares Bitcoin Trust ETF generating more revenue than BlackRock's iShares Core S&P 500 ETF.
Oh, yeah.
And that's pretty wild, right?
Yeah, but they try and keep the expense ratio way down on the index tracker.
I understand. Okay, all right, that's fair. But they also talk about, we've seen so much money going into Bitcoin ETFs in general because of U.S. regulators opening the doors to mainstream adoption. So let's talk about some of this because our next guest is sure to have some thoughts on today's regulatory environment. I know, Matt, you've talked with him a lot. He heads one of the world's biggest Bitcoin miners. Fred Thiel is chairman and CEO of the publicly held $6.1 billion market cap company, Mara. He joins us from Miami, Florida. The stock, by the way, as you reminded me, Matt, up 1,800% in the past 5 years, up 4% year to date, with nearly 30% of the float short. Fred, great to have you here. I know Matt and you have had several exchanges, macro and micro, in terms of the industry, but help me out here. And as I was kind of reading in here, you're an energy and infrastructure company. You're a Bitcoin miner. You lay this all out on your website. What really drives revenue growth at the company? Because our FA page on the Bloomberg basically says it's Bitcoin mining. Is that what you guys do? Is that what leads you to profitability?
Yeah, essentially, we operate 16 data centers across 4 continents, and the majority of the load that we operate, the compute that we operate, is Bitcoin mining. And when we mine Bitcoin, the Bitcoin that we receive for doing that, we keep. And so that essentially we recognize as revenues. But we're in the process of beginning our transition and expansion into inference AI, which will be a growing portion of the workloads that we deploy. We also are a vertically integrated technology company and energy company. We own energy assets. We own wind farms. We generate energy off of flare gas and oil fields. We're able to develop, co-develop technologies around ASICs, software orchestration layers. So we're a technology company that's very focused on maximizing the value of every electron we can get, and we help energy companies take excess energy and turn it into profits.
What's going to lead you to profitability?
Well, a combination of things. One is obviously the Bitcoin that we hold on the balance sheet is constantly marked to market. But more importantly, as Bitcoin continues to be accumulated by institutions, you mentioned it in your kind of preamble as you're talking about, BlackRock's Bitcoin ETF having garnered bigger fees than the S&P 500 fund. There's a huge amount of institutional interest in Bitcoin. There are a number of Bitcoin treasury companies springing up every day, and you're seeing an accumulation of Bitcoin, which is driving the price up. We're almost at record highs again. And as that continues to move upwards, it helps us generate considerable margins. The thing with our business, similar to the AI business, and I think you're going to find this if you look at any AI company that operates large data centers, is there's a huge CapEx investment up front in building these sites, and the profitability comes over time once the equipment has been depreciated. We depreciate our equipment over 3 years. And unlike our peers, we have the ability energy mining off of flare gas, we're able to essentially move our ASICs that have been depreciated to these low-cost marginal cost energy sites, and that drives much higher profitability and also better capital utilization.
I'm sure you've been following the back and forth between Jim Chanos and Michael Saylor. It's been really entertaining. But, MicroStrategy stock is up even more than yours. I think like 3,000 or 4,000% in the past 5 years. And these kind of leveraged, Bitcoin holding companies are popping up all over the place. What do you make of that? Because those companies don't really do anything else besides, sell shares and borrow in order to buy Bitcoin.
Yeah. So, the model with Bitcoin treasury companies and the model that, Michael Saylor has optimized is essentially buy Bitcoin, issue equity, and as the price and value of the Bitcoin that you have continues to go up, it drives your equity price up. And if you can raise capital at a higher price than Bitcoin, then your Bitcoin yield per share goes up, which is very attractive. The problem is what happens if Bitcoin price stays flat or starts to go down. You said his stock was up over a 5-year basis by a huge amount, which is true. But if you look from year to date at its performance compared to the Bitcoin miners, even, you're starting to see that performance is running into headwinds. In theory, a Bitcoin treasury company's price should increase by upwards of 2 times whatever Bitcoin's price is increasing on a daily basis because of the leverage that they're driving. And that's not the case anymore. I think what we're starting to see is the saturation of the Bitcoin treasury business market, because to your point, they're not in any other business. They're taking over a company with a marginally profitable business, and they're turning it into an accumulator for Bitcoin. And at the end of the day, you have a bunch of people competing for capital, and that capital is going to go to the highest return, which means the lowest multiple to NAV. And over time, that multiple to NAV is eventually going to go to zero, not unlike what happened with Grayscale, where for a long period of time, the Grayscale Trust, which held Bitcoin, was trading at a discount to its NAV. And I think there's risk, especially as you layer a lot of debt on these companies. If Bitcoin goes down by any considerable amount or stagnates for any length of time, there could be challenges for them to maintain that multiple.
You're borrowing against Bitcoin as well. Obviously, you have other businesses that you're running. You mentioned the 16 data centers, the energy generation, inferencing, which is, I agree, going to be absolutely monstrous, but it's still risky. How do you manage those risks?
Well, we follow very much a capital allocation model where we look at our average weighted cost of capital, and then we look at the types of investments that we're making to see that we're ensuring that we have, are above a certain hurdle rate across a variety of places. And if you think about our business, we were basically 5 people and a few miners 4 years ago, and today we're the largest in the world at what we do. And we're also the second largest holder of Bitcoin in the world of corporate entities. And so I think we have built a very strong balance sheet. We've built the ability to execute. We're the only company of the publicly traded miners that has the geographic distribution that we have, and that has the kind of breadth of business that we have. And I think that's going to pay off very much, not just in the near term, but the long term, as Bitcoin becomes more and more of an institutional asset. Bitcoin data centers start becoming more and more integrated into energy transformation plays with data centers. The grid has a huge need for flexible baseload, which is essentially a type of compute that can turn on and turn off as needed by the grid. You guys saw with the heat bubble that happened in the Northeast, the grid was strained. Yet in Texas, they didn't have those issues. Why? Because in Texas, they have a large amount of Bitcoin mining on the grid, where the grid operator can tell them, hey, shut off, I need the energy. And Bitcoin miners comply and shut off. If you had more Bitcoin mining across the grids in this country, especially the grids that are heavily loaded, you would not see the challenges that you have today, such as in PJM and other ISOs, where consumer are being impacted by increasing prices of energy, because AI loads, which are not flexible, are coming online, and they're getting more and more strain on their grids. So we play a very unique role in helping balance grids and helping make grids more flexible. And I think what you're going to start seeing is embracing and a bit of a marriage between AI data centers, Bitcoin mining, and how the two can work together to optimize grids and make sure that there's plenty of available energy for consumers. If you want to do some research, Duke University did a study about 4 months ago on this topic that showed that there's more than enough energy on the U.S. grid to support flexible loads if they could flex 0.25%, which is a quarter of a percent. And we flex upwards of 30-40%. So we're clearly an answer to that problem.
Let me just ask you though, on this, and you talked about the hot weather and that Texas, managing it, but how has the hot weather increased the energy costs when it comes to Bitcoin mining and for all miners so far this summer?
Well, most of our sites in the U.S. operate in Texas, also Nebraska, North Dakota, Ohio, amongst other places. And so the northern regions don't sit on grids where you have really that challenge. In Texas, you've had a lot of hot weather, and you've had a lot of what's called curtailment, which is when the grid operators contact us and say, hey, we need you to shut off. And so the impact to Bitcoin miners is that we essentially don't operate, so we're not generating revenues those days. But the benefit to us is that we get lower priced energy because of that. And providing that flexibility to the grid in Texas allows the Texas grid to not have to buy extra energy that is very expensive. If you think about the energy markets, base load is kind of the energy that runs all day long. It has a fixed price. And then you have this variable or intermittent energy. Wind and solar farms create a problem for grids because the wind doesn't blow at a constant rate for a constant number of hours every day, neither does the sun. And so they're dealing with balancing this variable intermittent generation from solar and wind. And at the same time, demand is different all day long. So you need to match the two.
I totally get that. Just quickly, I know Matt wants to also ask something, but I want to ask you a quickie. Are you looking for other areas of the U.S. or even the world when it comes to new Bitcoin mines?
Yes, absolutely. We have a stated objective that 50% of our revenue will come from outside the U.S. by 2028, and we're quite a ways along in building a pipeline of opportunities across places in the Middle East and Europe where we believe we'll be able to meet that goal quite handily.
I would be happy in the great state of Ohio, and not need to go anywhere else. Go Buckeyes. Fred, I want to ask quickly about, you have developed new technology for inferencing, including a proprietary two-phase immersion cooling technology, which I think is really neat. And but the thing is, with inferencing, you don't need nearly the power that you need for training, right? And I wonder about the hardware that you're using, because NVIDIA chips are obviously very expensive and maybe overkill for inferencing. Have you said, or are you working with other chip makers to get your gear?
Yeah, absolutely. So the inferencing is very similar to Bitcoin mining in that you're constantly chasing an efficiency curve. In the world of inference, it's lowest cost per token. And, obviously in AI, a token is not what it is in the crypto world. But a token is a measurement of a certain amount of compute. And so there's this constant need to lower the cost of token. As AI gets more intelligent, as there's more reasoning in AI, the cost to do a query and inference becomes more expensive in the number of tokens that it takes. And the single biggest challenge that if you talk to enterprise customers, they'll tell you, the price per token is too high. We need a lower cost per token. And at the same time, they need to ensure that they can get access to very rapid responses. So these data centers have to be in close proximity to the customers, and the energy costs have to be low. So we've been working with people all the way down the cost curve, all the way down to ASICs, as we look at inference as a way to lower the cost. And we totally predict that there'll be a very extreme cost decline over the next 2 to 3 years in inferencing as new technologies come in place. so that you won't have to use this huge infrastructure that you have for learning. One of the biggest challenges today is that a data center builder needs to get a payback on all that investment in under a year, because the technology in their data centers is obsolete after a year. Just look at what NVIDIA is releasing in the way of technologies.
So glad we could get some time with you. I wish we had more. Come back soon. Fred Thiel, thank you so much. Chairman and CEO of Mara.
This is the Bloomberg Businessweek Daily Podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.